This is Matthew Cratter from Trader University, and today I want to talk about Warren Buffett versus Elon Musk, their differences in their investment perspectives, and what this can teach us about investing in the world of innovation. If you're interested in learning how to make money in both bull and bear markets, or you just want to see what I'm trading or investing in, be sure to hit that subscribe button. So obviously we've had the news that Elon Musk just surpassed Warren Buffett in terms of his net worth. Now, some of this is because Buffett's been giving away his money, obviously. But I thought it'd be interesting to kind of move beyond the headlines and really think about how Elon Musk approaches the world and investing versus Warren Buffett. So I would say that Musk is obviously an innovator, one of our great inventors. He's into solving really hard problems and pushing the frontiers of human knowledge. Warren Buffett, I would argue, is the exact opposite. He developed this idea of the investment moat, which I believe he got from Ben Graham. Buffett talks about using investment moats as a way of protecting a company and ensuring that it can stifle competition and innovation. So where Musk is really moving us towards the future, Buffett has been all about preserving the status quo and sort of rent-seeking and milking an existing customer base. Elon Musk, I love this tweet, "Open your eyes, look up to the skies." One of his really, really great ones. Trying to get people to Mars by 2025. Really a visionary. And then on the other side, you have Buffett and the sort of role model he is, always talking about cherry Coke. And if you look at his portfolio, it's really shocking how much of it is addictive garbage, junk food. Everything from Kraft Heinz. Now, obviously, I ate all this stuff growing up as a kid. Occasionally, I like to eat it, but this is definitely stuff that holds humanity back. I mean, spreading Coca-Cola all around the world has made Buffett very rich, but it's also created a huge amount of diabetes, especially in emerging markets. And I think Buffett has this. He has this very nice public image, very grandfatherly. But when you really dig down and you see what he does and what he invests in, I think it's disturbing, actually. You can go back and read this. I'll link to this. This is a famous talk by Charlie Munger, where he talks about how to create a $1 trillion company. He's basically talking about Coca-Cola, but he talks about how you need to include sugar and caffeine and salt and make it really addictive and have it spread all over the world. And you create it with no aftertaste, and so people will drink more of it. It's a brilliant. Munger's a brilliant guy. Buffett's a brilliant guy. But when you read this in the context of modern addiction and everything like that, it's actually quite disturbing. So I'll link to that. It's definitely worth reading, though. Munger talks about the famous Lollapalooza effect in here. On the other side of some of more Buffett's investments, he sold off some of these. I believe he's sold down Goldman Sachs at this point. Buffett investing in the big U.S. banks, really the opposite of innovation. These are giant rent-seeking corporations that use their power and their government sanction to keep down rivals. This is a great meme. I don't always go to the bank, but when I do, I avoid Wells Fargo, which is sort of Buffett's longest and most famous bank holding, perhaps besides American Express. Wells Fargo has just a tremendous amount of power. Here's a recent story telling clients they need to have $1 million in balances to do a jumbo mortgage refi. This is obviously a sign of the amount of competition that's in this market. Buffett has been a large holder of Moody's since, which is a bond rating agency, since before the financial crisis. And Moody's was one of the real contributors to the great financial crisis. Everything crashed. Buffett got in on a lot of sweetheart deals during the great financial crisis of 2008 and 2009. And he's really famous for never having criticized Moody's for what they did in terms of rating risky bonds as being not risky. I'll give you one simple example of a big established company, Coke, obviously an iconic Buffett holding, and their idea of innovation versus what real innovation looks like. Here's a story from late last year. Coke launching a new sparkling water brand called AHA. Obviously, Coke's market share has been falling a lot over the last 20 years as people move to sort of healthier beverages. But here's Coke's idea of innovation: sparkling water with caffeine, of course, to make it addictive. When you compare it to all this really flourishing of innovative products that we have now, particularly in I would say particularly in the U.S. Here's a company called Dram Apothecary. I've had their beverages, and they're just amazing. Here is one that adaptogenic CBD sparkling water with silver ear mushroom and moringa leaf and bellberry. Really cool stuff like this, as opposed to it's much more difficult, especially when you have an investment moat like this, to really think outside the box. You've been so protected for so many years. And this is sort of the difference. If Elon Musk were going to start a soda company, he would I think he'd do something more like Dram than Coke. If you look at Buffett's biggest stock holdings here, these are the largest. He obviously has private companies, private subsidiaries of Berkshire Hathaway, but you just look at this and it boggles the mind. If you were worth hundreds of millions or billions of dollars and you woke up in the 20th century holding things like Bank of America, Delta Airlines. He's obviously since dumped the airlines. JP Morgan, Moody's, US Bank Corp. These are companies that have a real stranglehold, and perhaps it's a warning for all of us that Buffett also owns Apple and Amazon. If he didn't hold these, he would have fallen much further behind the S&P 500 than he has. But it may give you insight into Apple and Amazon's monopoly powers. Buffett likes investing in companies that are anti-innovation, that swallow up, that prevent new competitors from entering the landscape. So obviously owns Apple and Amazon, as we said. I'll link to the list of, I probably don't need to even do this, but obviously the list of Wells Fargo scandals, extremely long. JP Morgan scandals, really long. Here's a story about how they owned a ship containing 20 tons of cocaine. These are companies that have been involved in money laundering for many years, laundering drug money, laundering terrorism money, and just not very nice companies, in my opinion. Finally, we'll finish with Buffett on his views on money, gold, and Bitcoin. And here he's definitely a fan of the fiat system, where very anti-gold. This is a famous article from Fortune from 2012, where he talks about how he likes stocks so much more than gold and bonds. And this would make sense from someone who owns so many of the big banks and is so invested in the fiat system. But if you look at how Berkshire Hathaway, which is Buffett's company, obviously his conglomerate, his holding company, Buffett's Berkshire Hathaway has, at this point, has been underperforming gold for most of the last 20 years. Here's the chart. The red is gold, and gold, the actual precious metal, the commodity, and the blue line is Berkshire Hathaway. So quite ironic that he's actually underperforming gold over this whole time period. If you compare Berkshire Hathaway to Bitcoin, I probably should have used a logarithmic chart here, but you can see Bitcoin's up something like 7,000% over this time horizon. I think I have it only going back to 2013, and obviously Berkshire. It's kind of an unfair comparison because Bitcoin's started off as a very small company. I mean, a very small, new currency, and Berkshire Hathaway is obviously much bigger with slower growth rates. But I just find it ironic that someone who attacks gold and attacks Bitcoin would have just massively underperformed them and continue to underperform them. Munger, also not a fan of Bitcoin, saying that's disgusting that people buy Bitcoin. Munger and Buffett are the kind of people, they want you locked into the fiat system, and so they can continue to charge you crazy fees like Wells Fargo does. And what's ironic is most of these bank fees, obviously, they hurt working class and middle class people more than they hurt upper class account holders. So one of the great ironies. But I would suggest that history is probably going to judge Buffett a little bit more harshly than his contemporaries have. Here's great Buffett's famous saying that I think Munger said as well: Bitcoin is rat poison. rat poison squared. And here I think Buffett really is a dinosaur. This is a great image of magic internet money, Bitcoin, as the meteor, the comet that destroyed the dinosaurs. And here we have all these legacy currencies like the Canadian dollar and the euro and the Australian dollar and the U.S. dollar. Then Warren Buffett is over here on the left as one of the dinosaurs. If you found this video helpful and you really want sort of kind of a less superficial or fun version of it, I have a much longer video on why value investing is dead and why it has stopped working since 2009. If you really want to dig into that and get an idea more of why this strategy has continued to underperform and should continue to underperform going forward, I'm much more, as you can tell, much more in the Musk camp of innovation, growth stocks, moving humanity forward. If you found this video helpful, be sure to hit that subscribe and like button. Let me know your questions and comments in the comment section below. And hope you guys have a great Sunday. I'll see you in the next video.